Welcome to The Swing, the official newsletter of the Forex Trade Room, Volume 24, September 27, 2024. The US dollar fell to 100.3 on Friday, nearing its lowest point since July 2023, after key economic data signaled a cooling economy. The Fed's preferred inflation gauge rose just 0.1% in August, below expectations, while consumer spending remained soft. Jobless claims hit a 4-month low, and GDP growth for Q2 was confirmed at 3%. With markets split on whether the Fed will cut rates by 25 or 50 basis points in November, the dollar's future remains uncertain. Lower rates could weaken the dollar further, boosting other major currencies. The Australian dollar slipped to around 68 cents on Friday, as investors cautiously awaited a key U.S. inflation reading that could influence Federal Reserve rate cuts. Despite the dip, the Aussie is still near its highest levels in 19 months, thanks to economic stimulus measures from China that could boost demand for Australian exports. Domestically, the Reserve Bank of Australia held rates steady at 4.35%, while inflation in Australia dropped to a 3-year low of 2.7%, though mainly due to temporary government rebates on electricity. The movement of the Aussie could hinge on the outcome of the U.S. inflation data and the Fed's next steps. The Canadian dollar weakened toward 1.35 per USD after soft GDP data for August raised expectations of more rate cuts by the Bank of Canada. Gains in oil and gas extraction were offset by declines in manufacturing and transportation, leading to market bets on a 0.5% rate cut. Governor Tiff Macklem hinted that more aggressive cuts may be necessary if the economy doesn't improve. Meanwhile, the US dollar also weakened following softer PCE inflation data, providing some support for the loonie's decline. The Japanese yen surged 1% to 143 per dollar on Friday after political shifts in Japan's leadership. Shigeru Ishiba, the newly elected leader of Japan's ruling party, is expected to become the next prime minister. Ishiba is seen as less dovish than his rival but still favors economic stimulus and cautious monetary policy. Meanwhile, Tokyo's core inflation slowed to 2%, reinforcing the Bank of Japan's cautious stance on future rate hikes. The yen's rally comes as the US dollar faces continued pressure, especially with upcoming Fed decisions. The New Zealand dollar slipped to 63 cents after a 1% rise in the previous session, as investors await the US PCE inflation report for clues on Federal Reserve rate cuts. Domestically, the Kiwi faces downward pressure amid expectations of a rate cut by the Reserve Bank of New Zealand in October, with markets pricing in a 67% chance of a 0.5% cut. Meanwhile, consumer confidence in New Zealand continues to improve, hitting a 32-month high in September. The Swiss franc strengthened slightly to below 0.84 per US dollar after the Swiss National Bank cut rates by 25 basis points for the third consecutive time. However, some investors had expected a larger 50 bps cut, especially following the Federal Reserve's recent actions. The franc is nearing its highest levels in 12 years, and traders are divided on whether the SNB will cut rates again in December or keep them steady. Opinions vary on whether the next potential cut would be 25 bps or 50 bps. The pound rose for the third straight week against both the US dollar and euro, hitting over 2-year highs. This strength is largely due to the Bank of England's cautious approach to cutting rates, giving sterling a yield advantage. While markets expect limited rate cuts from the BoE this year, potential cuts in November and December could be a downside risk. The UK economy has been growing steadily for 11 months, making the pound look healthier compared to the euro. The pound is also on track for its best Q3 performance since 2013 against the dollar. The euro fell by 0.3% to $1.11 on Friday, heading for a weekly loss as inflation in France and Spain dropped more than expected. France's inflation fell to 1.5%, the first time below 2% in over 3 years, while Spain's inflation dropped to 1.7%. These declines have fueled speculation that the European Central Bank could speed up rate cuts, with markets pricing in a 70% chance of another cut on October 17. Despite this, the ECB has warned inflation may rise again, and stability might not return until 2025. More data from Italy, Germany, and the Eurozone will provide further insights next week. The Mexican peso weakened to 19.65 per USD, retreating from a recent high of 19.12, after the Bank of Mexico cut its benchmark rate by 25 basis points to 10.5%. This decision was driven by improving inflation, with headline inflation dropping to 4.66% and core inflation at its lowest since February 2021. However, weak domestic economic activity and market volatility also played a role. While the rate cut was expected, the central bank remains cautious due to concerns about inflation and potential peso depreciation, signaling that future cuts may be limited. WTI crude oil futures rose to $68.20 per barrel on Friday, recovering some of the losses from the previous session as Hurricane Helene forced 25% of Gulf of Mexico oil production to shut down. This came after prices dropped sharply on Thursday, following reports of increased production plans from Saudi Arabia and OPEC+. Investors are also weighing China's new economic stimulus against persistent weak demand from the country. Despite the rebound, WTI crude is down nearly 6% for the week, with geopolitical tensions in the Middle East adding to market uncertainty. Gold prices retreated by 0.9% to $2,648 per ounce on Friday after reaching a record high of $2,672 in the previous session. Despite the pullback, gold posted a 1.6% weekly gain, fueled by the Federal Reserve's half percentage point rate cut and China's stimulus measures. Traders are anticipating further Fed rate cuts, with a 56.7% chance of a 50 basis point cut in November. Geopolitical uncertainties and a dovish outlook from central banks continue to support gold, marking its third consecutive week of gains. U.S. stocks finished mixed on Friday as investors analyzed fresh inflation data that may impact upcoming Federal Reserve decisions. The S&P 500 slipped 0.1%, while the Nasdaq dropped 0.4%, weighed down by a 2.1% decline in Nvidia shares. The Dow Jones rose 0.3%, hitting a fresh record. The August PCE index showed a modest 0.1% increase, signaling cooling inflation and boosting expectations for a possible rate cut. Consumer sentiment hit a 5-month high, adding optimism that inflation may approach the Fed's 2% target by 2024. It's set to be a busy week for U.S. markets, with the labor market report and key appearances by Federal Reserve officials, including Chair Jerome Powell, taking center stage. Traders will also keep an eye on JOLTS job openings, ISM manufacturing and services PMI, and factory orders. Globally, inflation data is due from countries like Germany, Turkey, and South Korea, while Japan will report on industrial production and unemployment. China will release manufacturing and services PMI data, and trade figures are expected from Australia, South Korea, and Brazil. That brings us to the end of this week's Swing newsletter. As a reminder, don't forget to tune in for Mindset Mondays with Ryan Carthage starting at 6:30 a.m. Eastern Standard Time. Enjoy your weekend and good luck in the markets this week.